Hello friends, this is Raju. Welcome to the weekly analysis of Bank Nifty. So I quickly get into the Monday, how the Bank Nifty could have been traded. So 17th, if you look at it, there is a huge gap up. I'm just taking it little back. If you look at 13th closure, 13th it closed at 42,137 and it's opened at next day at 42,600, which is a big thing. But if you look at the first candle, it has come down heavily, huge selling pressure on this. So one indication the market can go down. Point number two, look at all the stop losses which are below the first candle. Third is look for these small signals. So even intraday stop loss are getting created here. So possibility of going for P, that was the assumption you must take. Of course, it's end of the day, it's a probability game. Now my favorite, I am trying to put my Fibonacci drawing here. Look at it at about 38% area. The rejection came and market gave a huge return to the PE bias. Ideally, I suggest that trade should happen somewhere. Ideally, I suggest the noise will go down after 925, 930 types. Ideally, should look at this is the place, 936. This is a final confirmation that that market is going to go down. So this is the place you should take. Say it's at 42,130. It has come down to around 250 kind of a points. 801 is the 41, and 801 is the last thing. This is the 17th April analysis. I'll quickly move to next day. Simple. 18th, there is the raw stop losses below, and the first candle itself is created a stop loss here, and another confirmation is here at about 927. So again the possibility of PE trade at the beginning of the day is more likely. So the Fibonacci could have been, because anyway we wanted to trade after 930, which is ideally I suggest. So here the rejection comes. You should have taken trade below 23% here at 944. What was the Bank Nifty? The reading is 42,418. It has come down to 275. So around 100 plus points. This is a good risk reward. Also, I suggest when you are making foundation, take a reconfirmation from even a 5-minute chart. Even 5-minute chart is saying there is a possible intraday stop loss are getting created here. And stop loss, previous day stop loss are also below. So the possibility of coming down is high. Accordingly, you can trade. So day 3. Nineteenth, look at the first candle. Here, if you look at it, stop losses are below and on top as well. Okay, so the first candle created a big opportunity here in terms of creating stop loss. So market must come down because the more liquidity is here. Intraday stop loss as well as previous day stop loss are here. Here you must look at is when you're getting into the trade, when there are stop loss of previous day on the top over first candle. Ideally you look for trade, you wait till it reaches here, the peak point. So it didn't come to that level, but it came close. So if you draw Fibonacci, this is how it looks. You could have traded somewhere here at 941, which is a bigger candle. Then it gave a good reward. For example, if you have traded here 274, 42,274, and it came down to 150, around 120 points, which is a good this thing. And of course the stop loss could have been at this point here, that is, he could place somewhere stop loss around 42,350 types and all, fortunately which did not hit that day. So this is how 19th. Now let's go to 20th April. Interesting, the stop loss are below, so it's a red candle, not much of a SL created for intraday. So the how I trade, I'll tell you. The possibility of market coming down to take care of to eat these stop losses are high for the day. But how I worked on 20th, I'll tell you. Draw the Fibonacci. You enter here at 929, 42,269, and exited 42,376, which is 100 points. That is how a target. You might say, why you have taken the CG trade? Because when the stop loss are here. Simple. Whenever market is going straight up, you must draw the Fibonacci and you must look for 23 to, that extension is 23 to 38%. Ideally Fibonacci retracement is normally, if it bounces from between 50 to 61.8%, then it's a healthy kind of a way. But here the way market is going, shooting up, you can't expect a retracement of up to 50 to 61%, 61 point, that too on an intraday. If it's in a weekly, a bigger time frame, then you could do it. So this is how you could trade. Now I will move to the 21st. Look at this. The stop losses. First look at the previous day stop losses. Stop losses are here. So the possibility of assumption is market can come back to take care of the liquidity side. So if you draw Fibonacci, you could see these two candles are the decision, this thing. That means this is the decisive move, that it will go to P side. These 932, 933 candles. So you could have traded somewhere here for a safer side, for double confirmation around 941 because we are sure that market will come down. So this is how. Of course, the move is huge on 21st, but for us, we must decide our own risk reward. Had you taken here at 941, which is the closure is 42,293, you could have exited here, which gave a 100 points again move. So I so that's all from my side. Once again, I have my own way of reading or understanding charts. My idea is I want to make people that know trading bank nifty is as simple as it is. That is my whole idea of creating these videos. Thank you so much. Please subscribe and like if you like this video. Thank you so much, friends. Have a great weekend.